Every time you put money into a bank, you probably think your money is safe. You trust the bank. You believe they are simply protecting your hard-earned cash. But what if I told you banks were never designed to protect your money? They were designed for one thing only: to make money. And the craziest part, even when the economy crashes, banks usually still win. So the question is, how do banks keep making billions while ordinary people struggle financially? By the end of this video, you will never look at banks the same way again. Let's start with a simple question. What happens when you deposit money into your bank account? Most people think the bank stores their money safely in a vault, something like giant locked doors, security guards, and stacks of cash sitting quietly. But that's not what actually happens. The moment you deposit your money, the bank immediately starts using it. Your money is no longer just sitting there. It becomes part of the bank's business machine, and that machine exists to generate profit, not for you, for them. Here is where things get interesting. Imagine you deposit $1,000. Now, logically, you think the bank keeps that money, but in reality, they may lend out most of it to someone else. For example, you deposit $1,000. The bank may lend $900 to another customer. That customer now pays interest. And that interest becomes profit for the bank. Think about that for a second. They are making money using your money. And they repeat this process millions of times every day, but lending money is only the beginning. Banks make huge profits through interest rates. This is where the system becomes unfair. If you keep money in your savings account, many banks might pay you 1% interest, sometimes even less. But if someone borrows money, the bank may charge 6%, 8%, or even 20% depending on the loan. So imagine this: you save $10,000 for 1 year. You might make $100. Someone borrows $10,000. They might pay $2,000 in interest. See the difference? That gap is pure profit. But wait, banks have another trick: fees. And these fees are everywhere. Monthly maintenance fees, ATM withdrawal fees, international transfer fees, late payment fees, overdraft fees, account closure fees, even inactivity fees. Most people ignore these charges because they look small. $5 here, $10 there. But now imagine millions of customers paying those same fees. Suddenly, those tiny fees turn into billions, without the bank doing much work at all. Now here comes the scary part. Banks can even make money during economic crises. Remember financial crashes? When businesses fail, people lose jobs, and markets collapse. You would think banks suffer too. Sometimes they do, but often governments step in and save them, because banks are considered too important to fail. In simple words, when ordinary people lose money, banks often get rescued, and taxpayers help pay the bill. That means regular people take the pain, while banks survive. And there is another giant money machine: credit cards. Every time you swipe your card, someone pays a fee. The store pays processing fees. You pay interest if you miss payment deadlines. Late fees are added. Penalty charges appear. And sometimes interest rates go extremely high. Banks have turned simple plastic cards into billion-dollar profit systems. Every single transaction makes them richer. So now you understand the truth. Banks don't simply protect your money. They use your money. They lend it. They charge interest. They collect fees. They profit from debt. And sometimes, even when everything goes wrong, they still survive, because the financial system was designed that way. The real question is not why banks make so much money. The real question is why nobody teaches ordinary people how this system actually works. And once you understand the game, you stop being controlled by it. If this video changed the way you think about money, subscribe. Because the financial world is full of secrets, and most people discover them too late. See you in the next video.